Hey everyone, I'm Destiny Okonkwo and you are watching Carrying Purpose. So if you're new to my channel, welcome. And if you've been here for a while, welcome back. I have changed the name of my channel to Carrying Purpose because I am headed in a different direction a bit. I'm more so now wanting to focus on helping and supporting Black and brown young girls, Black and brown young ladies, and Black and brown young women on finding their purpose, honing in on that purpose, and identifying a blueprint to getting to executing and living in their purpose. For today's video, I will be talking about taxes. Nobody really likes to talk about taxes, and nobody talks about it as much as it should be spoken about. I brought this topic up specifically because I have went through the variations of changing tax brackets and the impacts of experiencing tax issues. I'll be providing information for the W-2 employee that's just full-time, one job throughout the year, or the W-2 employee that has multiple W-2 jobs at the same time within 1 year, or the W-2 employee that also does 1099 contracting on the side throughout the year with multiple jobs. I do want to caveat this. I am not a tax preparer. I do not specialize in taxes. If you are having legal matters or you're having issues with your taxes or you have questions with your taxes, please reach out to a tax preparer or reach out to a tax lawyer. I think there are lawyers that specifically focus on taxes. What I'm giving you is just simply the basic. You need to do this for yourself so you know how much you're having being taken out when you do fill out your W-4 or when you do fill out your W-9. Your payroll department is actually legally not even allowed to tell you how much you should be taking out every week or every month or whatever the frequency is that you get paid. So it's on you to figure out what those figures are, add up all the different jobs that you probably have for the year. If you're only on one job, this is the first time you've had the job the whole year, figure out what your projections may be for the year and get those figures correct before you even fill out your W-4. Because if you fill out your W-4 or your W-9 incorrectly, when it's time for you to file, the IRS or the state board where you are does not care that you filled it out incorrectly.
God have mercy upon us.
And I'm speaking from experience. Okay, let's get into it. First, you want to get your writing material. I prefer to do this technologically. If you are more comfortable, you can just get like, you know, back in the days when they used to have those like graph books. Yeah, you can get a graph book. It's the same thing as an Excel, but for the purpose of this demo, I will be using Numbers for Mac, which is essentially the same thing as like Google Sheets or Excel, Microsoft Excel. So I have already set up the numbers and my notes. These are all made up figures. You obviously will be using real figures, but for the purpose of this demo, I have made up figures for us to use. Okay, so first you want to start with figuring out if you are someone that worked multiple jobs for the year, or you plan on working multiple jobs for the year, or at the time of you calculating this, you have already worked a certain amount of jobs. You want to find out what you paid on your federal, your state. For the purpose of this demo, I'm using California, and then your Medicare, your Social Security, and then your state disability insurance. You want to be able to map that out and look at those figures isolatedly, because those are the taxes that you're actually supposed to pay. You're supposed to pay or you're supposed to have deductions for your health insurance and all that other stuff. We're not really focused on that. We just need to focus on what we owe IRS and the state that we live in. All those other figures will kind of fall into place and be covered based on the method that I'm about to use. So for job one, you want to go into your pay stub. Now, for the purpose of this demo, I have gone ahead and just like gotten one of the old pay stubs that I used to have so I can show you where you're gonna get these figures from. Every pay stub is different, but there's always a section where it shows you the taxes withheld. That's where you want to see that. Another pay stub that I have, as you can see here, this one is a little bit more intricate, but it'll show you right here, like under taxes. Somewhere on your pay stub will be a section that shows you the taxes, what was withheld, how much was withheld, and it is always broken out by the current, which is what is withheld within that particular period that you're in, and what was withheld up until that date from the date that you started, which is the year to date. So that figure is what you actually want to be more so focused on, so you don't have to do too much intricate math while you're doing this. So back to our Excel sheet. So you want to start with job one. So let's just say at job one, your federal taxes was $213 and some change. That's gonna be here. Your federal income tax is your federal taxes for the purpose of this demo. So your federal income tax is how much that you are paying to the IRS, the federal IRS standard. That is your standard amount that's being taken out. You wanna put in your year to date if you are working multiple jobs. If this is your first job of the year, you don't really have to worry about that. What you should be calculating is going to be shown later. So I'll show you that later. So this is for the people that have had multiple jobs, or you're like doing a 1099. This is the section where you want to figure out how much that you've paid to federal. You want to figure out how much you paid to Medicare. You want to figure out how much you paid for Social Security, and then your SDI withholding, and then your state withholding. Also note that some employers will take out a federal SDI if the California one, or sorry, if the state one isn't, there was like a condition for it. There's a way that it works whereby some employers, if they don't offer something, they'll also take it out from the federal. Like if the state doesn't offer it, they'll also take it from the federal. I'm not quite sure how that exactly works, but some employers will take out your Social Security disability insurance from the federal, and as well as from the California or from the state that you're in. Okay, so you want to go in and populate every single one of those fields. I've already done this just to make sure that I use my time efficiently. After all of the calculations, this is where you should be for job one, job two, job three, job four. I'm giving like an extreme example, right? And these are all W-2 roles. If you are a 1099, because 1099 contractors, you don't get taxed per pay period, you will just go in and put your figures here under the total gross or taxable income. Some employers will separate your taxable income and then your gross income. Some employers will make your taxable income your gross income. So pay attention to those figures and exactly what it says. You should be looking for the highest number. Your taxable income is what you should be going with. Sometimes your taxable income, I believe, is supposed to be larger than your gross. So use your taxable, because from my understanding, that is the amount that they're going to be taxing from. Okay, so now that you have all of your figures and all of your totals, you want to go and figure out how much you will be making at your current, most recent job that you're currently working in until the point of your calculation, that day that you make that calculation, until the end of the year, December 30th or December 31st, whatever that date is. So for me, based on my calculations, I did from May 6th to the December 31st or December 30th, which was about 34 weeks. Now, if you are getting paid every 2 weeks, then you would do it based on that. You would figure out how many 2-week increments are within that period that you're calculating until the end of the year, December, or the last day of the day, or the last day of the year, December. So 34 weeks at the grossed amount every week, which I chose about $4,000 every week, right? Or yeah, every week. I calculated 34 weeks times 4,000. So that gave me my total projected that I could make from that day until the end of the year. Now this is a projection, right? You could make a little bit more, you could make it a little bit less. But the idea here is that if you're able to calculate the amount that's going to be taken out based on what they were already taking out or what they intend on taking out, then that buffer that you add to it will cover up what potentially you could make if it's more. Because what will happen is if you're making more and you're already taking out a lot and you're already taking out more than the average, whatever they calculate to take out will cover up what you're missing. Replay this if you need to track. Okay. So here are your totals. This is the total amount for my federal for job 1 and through job 4, total amount for my Medicare for job 1 through 4, so on and so forth. Now, this number here in red is the total amount that I made with job 1 through 4 and the amount that I intend on making from the point of my calculation until the end of the year, right? Got it? Good. This number here is my total amount of taxes that I have paid in total altogether. Now, our next row, needed tax totals until December. Now, so you need to go in and figure out how much taxes do I need to get to my objective, 1, and 2, what exactly is my objective based on my tax bracket? I'm glad you asked. So, I use this handy dandy site called talent.com. If you put in your gross amount, we're using the tax amount though, we're using the taxable amount because we want more taken out, not the average. And then you put in how much per period that you're trying to look at, excuse me. I'm doing annual, and then the state that you work in. I'm using California as the purpose of this example. Then you want to go down after you put in this figure. I've already put in the figure that we got here. So we got about 179,000, right? So just round up. Everything you do, just round up. It'll make your life easier. So I put in 180, and this is how much we are supposed to be taking out or having taken out. We're supposed to be at a 34.6% total tax. That means that if you multiply 34% or 34.6% of 180K, you should be at $62,199 for how much you're paying for your taxes. So just let that sit in for a little bit. If you're making 6 figures, you're paying about 35% to the government. That's their money, and you're only keeping about 65%. So this gives you an idea. If you're probably walking into a new job or you're walking into a new role, it's good to do these calculations so you can get an idea of how much your take home is, so you can know how you're prioritizing your bills. You can know how you're prioritizing your travel, your external expenses, your savings, your student loans, whatever the case may be. This number here, the 117,801, that is how much you would be taking home if you were at a 180 tax bracket, and that is taxable income. Here it's saying gross, that's fine. Gross and taxable usually are kind of the same thing depending on your employer anyway. So your marginal tax rate is how much you need to take out above the average. And the average tax rate is 35. So technically, you're actually at about 44% for your tax rate if you're at 180K. So your marginal tax rate is your incremental tax rate, and your average is just the average amount that you would be taxed. I would advise you to operate on your marginal tax rate so that way you can get a refund back and you are not struggling by the time that you file your taxes to figure out why you owe. Based on talent, you're at 180, your federal income tax, you should be paying $34,000. $34,411. That's how much you should be paying at 34%, right? So you want to go here and you want to subtract the total amount that you've already paid from the total amount that you should be paying for the year, right? So you've already paid $6,260. You want to subtract $34,411, which is your projected amount, and you want to do that for each tax section. SDI for federal. So here SDI is $1,540. You want to subtract whatever you've paid already by $1,540. Now, the way you do this math, or the way you should set up your formula, should be equal sign sum the number that you've already paid minus the number that you're supposed to pay. And where you have a negative number, that's where you know you need to increase the amount that's being taken out. So for here, I did $3,000 or $34,411 minus what I've already paid. Larger number minus the smaller number, so I know I need to have more taken out for this section. Same thing with here. So now that I've subtracted what my expected taxes to pay for each section is from what I've already paid, this is what's left over for the rest of the year. This is the amount that needs to be taxed for me for each period. So now I need to figure out what my payroll is currently taking out. This will give me the difference between what's going to be taken out for each period and how much I will need to add extra on top of what's going to be taken out, right? Like, what standard is my payroll already using? So go back to your pay stub, and this is where the current comes into play. So whatever your taxes are current, that's how much they take out on average for each pay period. So you want to take those numbers and spread it out across each one of these cells. But the calculation for this would be the amount that needs to be taken out, right? What the projected amount is for each pay period that you still have left over, and then the amount that they currently take out. So your expected amount for the year per section of taxes minus what they're already taking out, the average that they're taking out. You need to do the amount that needs to be taxed first before the amount that is projected to be taken out. You need to do that so that way you can figure out again if there are any negative numbers, because where there's a negative number, that's where you know that you need to definitely add more money extra on top to make sure you're covering your bases. So once you've done that for each one, you will have your totals at the end. So this is how much extra they need to be taking out every week, $408 spread across each category. For the purpose of this, I did not calculate the federal SDI because this particular employer, for the purpose of this demo, does not require this tax. They're just taking out the California SDI, right? But if your employer is taking out federal and California SDI or federal and state SDI, you should calculate according to that. So now I am noticing where my negative numbers are. I have a negative with the SSI, so that one I don't need to take out extra money for, I'm good. I have a negative for the California SDI, I don't need to take out extra money there, I'm good. So these numbers here, this is how much extra you should be taking out. So what you're gonna do is calculate the sum of the figures where you have positive numbers under each category, federal and state. So take this amount extra for federal taxes every period. So I have to add an extra $290 under my W-4 where it says extra withholding. And then I have to add $56 under the California or my state withholding form It's usually like a specific form for the state. I don't know what the designated numbers are, but it'll just say state withholdings. For the state of California, I'll have to take out an extra 50 something dollars. So when they do that each period, now by the time you get to filing your taxes, you should not be owing. You either should be getting money back or be at a zero level out balance. So you don't owe the IRS and the IRS does not owe you. I'd rather much be at a zero, okay, than owe the IRS. Now I want to point out some things here. At the end of your calculations, the amount of money that you've already paid in your taxes for the year up until the date that you did this calculation, and the amount of money that you have projected to pay for your taxes for the year based on your calculations should add up to the tax, the 34% average tax rate that you owe. That's what you should be, that's the number that you're targeting. Now, if you're like me and you're a little bit more extra and you just don't want to owe it all, I would advise that you do the marginal tax rate. And to get to this, you would just simply multiply the tax rate that they gave here, which was 44%. Just multiply that by the total amount that you plan on making, and that should be your taxes for the year. So if you were to do your taxes or the figures at the marginal tax rate, which is the higher tax rate, which is the incremental tax rate that you would be expected to pay, you would have to calculate the 43%. So to do that, we would do 43% times, I round up, 44% times my projected amount, which is 179, about 180. That is $78,000. Now you want to subtract that from the projected amount that you would be paying at a average tax rate, and that's about $15,000 of a difference. So you would want to divide that by how many weeks you have left of the year. For the purpose of this, we're at 34 weeks of the year, and that would give you $447 extra that you would need to be taking out every single month in order to make sure that you don't owe at the end of the year, or you get money back at the end of the year. So I've shown you the marginal and I've also shown you the average. For my experience, it's best that you go with the marginal, so that way you don't owe at the end of the year. Now, if you find that you want to do the marginal tax rate and you've already done the calculations and you're just taking out the average, right? You should put away, just put aside that $440 something every month. Put it away in a savings, throw away the debit or credit or access card to that particular account. So that way at the end of the year, when you are ready to go do your taxes, you're equipped and ready for whatever amount they're gonna throw at you. Or the IRS does have an option for you to be able to do estimated tax payments through their website. And that is just you pre-planning that you know you're going to owe. If you are someone that has found yourself in a situation whereby you didn't know what your taxes was going to turn out like, and you ended up owing like a huge amount of money, you have no way of getting out of it, the IRS and the states do offer you the option of payment plans, so you can get into a payment plan. These usually come right after you get the bill, so you have to wait after you file your taxes, wait for them to send you something in the mail. There's nothing you can do in that meantime to get them to send you that information. So wait till they send it to you, then you can sign up for a payment plan. While you wait, if you do have the money, you can pay for it through the estimated payment portion of the websites. So the state has it and the IRS has it as well. Another option for you is the offer in compromise. Both the federal and the states have it as well. You can send in this long, it's a very long application whereby you pretty much break down what you're offering them in compromise for the large lump sum that you do owe. So if you owe like a large amount, you can just offer them like a certain like smaller amount of that. They have like a calculator that allows you to calculate what that amount could be, what they expect you to pay. You can also, based on what you're going through, whatever situation that's caused you to not be able to afford it, you can also offer a specific amount based on that. A third option is after it goes to the IRS, like after you filed your taxes and everything and they've received the bill that you owe them, they will send you the bill in the mail. You can request for financial hardship, I believe is what it's called. There are terms and conditions to all of these applications that I'm telling you about, so please do read them thoroughly or get a tax preparer to help you. You can file for financial hardship, whereby they'll probably push out the payments. They'll probably give you a year to not have to pay for it at all, and then after a year you can reapply and they'll check your income, check how much you're making to make sure that you're still in a position where you can't afford to pay for it. Now, these are all invasive applications. Like, they really get up in your business. They want to know how much you're making, how much you're spending on your clothes, your shoes, your rent, all this other stuff. But I want to beseech you to understand that the more you're transparent with them, the easier it may be for you to get out of a specific debt that you're in. If you try to just sit in that debt, it's worse for you because they can start garnishing your wages. You could go to jail. You could pay penalties for owing the IRS or your state. So I hope this information was helpful. I will be linking all of the federal websites that I mentioned, all of the information that I mentioned for the specific state. I'll use California as an example, but you can look for the equivalent in the state that you do live in. But I'll link all of this information below, and I will also be sharing this template as a file for you to just download it and then use it for your own calculations. And you can just plug in the numbers with the formulas that I have provided. And I know it was a lot of information and I know it was a little bit hard to follow, but I do want to make it very clear that the more information you know on your own about your taxes before you even get to filing, the more helpful it is for you to at least brace yourself for what might happen. If you can at least figure out how many jobs you've had, if you've only had one for the year, and figure out what those figures could be like for owing or how much you may be projecting to make for the year, it will make it so much easier for you not to owe at the end of the year and know how much money you should be putting aside to make sure that you don't owe. If you have further questions, please feel free to email me, or you can leave a comment below. You can direct message me on Instagram, whatever the case may be. Feel free to reach out to me and I can direct you accordingly as to where it is you need to go, who you need to speak to give you the insight that you need. The worst feeling is owing taxes in the United States of America. Like, it is literally the worst feeling, especially when you actually work hard for your money. Your money's legit. Okay, you're not doing nothing suspicious to get these coins. It's very painful to owe the IRS or owe the state where you live. So if you found this information helpful or you found it useful, please feel free to comment below. And also feel free to let me know what other things we want to talk about on our path to carrying purpose. What things would you want to know about? What conversations do you want ignited to instruct you or give you the blueprint that you need or give you the thinking process that you need to really hone in on your purpose or even find your purpose and get to your destination that God has called you to. Until next time, everyone, I really loved this conversation and I cannot wait to tune back in to have another conversation with you guys about something that has to do with carrying your purpose.